What's up, everybody? Welcome to the Scratch Agency podcast, hosted by Scratch Agents for Scratch Agents. This episode is brought to you by Virtual Intelligence, your premier partner for client-facing and back-office virtual employees. My name is Stephen Turnbull, founder of T5 Insurance Services in Clinton, New York, and I'm joined by my co-host today, the one and only, you already know, hold your applause, Mr. Sean Fitzgerald, owner of Sound Harbor Insurance in beautiful Long Island, New York. Mr. Fitzgerald, how are we doing today?
I'm doing great, but not as good as you. It's someone's 30th birthday today, so happy birthday, Mr.
Easy
Turnbull.
with that. Easy with that.
How'd you wake up today? Did you have some arthritis in your fingers? Your
Some
back
arthritis, some back pain, a few grays coming through here. Yeah. I didn't know it instantly came on like that once you hit 30, but here we are. We're rocking and rolling. I appreciate that. Everything good at Sound Harbor over there?
Yes, sir. I'm excited to get into some financial conversation with Erik. I listened to a podcast he did with Cass back in 23, and there's some things I want to dive into there. So, yeah, I'm excited.
I am super pumped to have this episode today, and I want to preface it. We're going to have Erik Garcia, who's owner of Garcia Insurance Services, and Erik and I met about a month ago, maybe a few weeks at this point, but a local connection that I know who's an investment advisor here that I just see at the community events and all of that. This is what I love about this industry. Said, I got to introduce you to this guy that I know through my channels. Erik and I just got on a Zoom call just to introduce ourselves. And it was, you know, this guy, you know, Mike, you know, David, you know, this guy, you know, that guy. And then we just connected from there. So it's a small world, especially in our industry. But Erik, we're super grateful for you for taking the time to join us today. How are you?
Man, I'm good. I'm a little, I feel a little insulted right off the bat. Sean's insulting people's age here.
Yeah, I know.
You old at 30. Dang, man.
I know.
I can only imagine what he'd be saying about me right now. But I texted Sarah this morning and I said, hey, Sarah, I'm going on Steven's podcast. And she was super excited about it.
That's awesome.
That was a good intro. And you know how small of a world this is. I just hired a new team member at Plan Wisely on our financial planning side. Dude, and she's from Utica.
I know, it's crazy.
Utica wasn't even on the map for me a few months ago. Then all of a sudden I'm on your podcast and I hire someone from Utica. So
that's great. That's fantastic. Erik, I know there's some specifics we want to talk about. We get right into it on this podcast here, but let's just learn a little bit more about you, the agency. I know that you do the agency. You also have some financial planning stuff there, but let's just talk about your journey and kind of starting that Scratch Agency and where it brought to you today.
Yeah, I'm going to take you all the way back to 2001 when I first came into the insurance space. Graduated from college. My dad was a captive. He's been in the captive space since, just from when I was born in 79. So I kind of grew up in the insurance space. It was always an option for me to go. The joke was most people don't know they want to go in insurance. Stephen, maybe you can track me because your family's also in insurance, but it was always an option. My dad put me through business school at Tulane, and he always wanted me to come work in the agency. But I wanted to go on the investment side. I took a couple courses at Tulane that really inspired me, like on the financial side. It was just more interesting to me. And just through the discernment process, I realized that, hey, I can go work with my dad's company, the one he represents, the captive he works with. They've got a broker dealer. That was back in the day when every insurance company had a broker dealer, and they're getting all their agents licensed to do investments. So I can do the investment side, I can do property and casualty, and I have access to my dad's clients. So that's the route I did. And then in 2004, my dad and I actually merged our offices, and I was going to be life insurance investments, and he was going to do the PNC. And then that worked out for a little while. Then Katrina hit in New Orleans. And it kind of pulled me back really quickly into the property and casualty space because it was nothing but like claims for 9 straight months and more. So kind of in the end of 2006, 2007, I went to an MDRT conference the conference was actually in New Orleans pre-Katrina. And I went to the conference, met a business coach. Obviously, we didn't hire him because the business wasn't. I mean, the business model after Katrina was just survive, right? And in 2007, I ran into this guy again, and I decided to hire him. And a lot of the coaching was more on the investment side. He was more of I would say more on the financial services side than on the insurance side. So I slowly started pulling back away from the insurance side. And then in 2008, I decided to leave insurance completely. I left the captive. I wanted to develop more of the investment side of the business. My office was still in my dad's office. And then something started happening. Post-Katrina insurance in New Orleans, a lot of the companies stopped writing. There were very few carriers writing. Slowly, people started coming back into the marketplace. But my dad, being captive, couldn't get contracts with all these companies. So he started losing relationships that were 20, 25 years in the making. And I was watching these clients leave, and oftentimes, like literally in tears, like, gosh, Felix, you've done our insurance for so long. What are we going to do? So I'm sitting here looking at that, thinking like, man, the most valuable things we have in this industry are our relationships, not our contracts, not our carriers, our relationships. If we have a relationship, we can move that relationship if we have a good product or a good service for them. And it really, it struck me that, man, we have to find a way to accommodate these people. And at the time, my brother, who was my first business partner in the Scratch agency, was wanting to move back to New Orleans. So I said, hey, dude, look, move back to New Orleans. I know the industry. I know the business. I'll work on getting some contracts, and you come in and you just write business. We got my dad's centers of influences that we could leverage. We took one of my dad's staff members who was selling life insurance. We flipped them to the property and casualty side. It was agreed upon. It wasn't any like me taking his employees. And that's what we did in 2010. We started the Scratch agency in 10, and it was wonderful, man. Like, we got one of the contracts that was writing. There weren't very many carriers, and we had one that was super competitive. So we wrote a ton of business. My brother, and then Giovanni, who's my current business owner, just sat in the office writing business, dude. And then like year 2 hit, and I had never had to deal with this as a captive. I learned a really fast lesson that there's these things called renewals. And we had multiple carriers. So we had like multiple carriers sending us renewals. Then we had to like remarket a lot of these because the one carrier that was hot all of a sudden had like a 40% rate increase. Holy crap, 40% rate increase. So it was a nightmare. And that's when I realized I gotta like shorten my learning curve really, really fast. And I joined the local PIA. I joined the Big I. I started like finding, I wanted to meet like the people like at the top, like how are they doing it? I want to learn from them. I ended up going to the Big I conference in the summer of 2011. And there was a young agent who was speaking, who was kind of on the circuit for the Big I, and it was Jason Cass. And I met Jason, and that's, I'm like, I like the stuff he's talking about. He's a guy I want to learn from. I like how progressive he is in the space. So for me, it was, man, I needed to learn quick. I needed to cut my learning curve really quick when we started the Scratch agency. My brother ended up going back to engineering. Engineers don't make good. If anyone's thinking about hiring an engineer as a salesperson, don't. They make terrible insurance people. And Giovanni, my current business owner, bought in probably like in 2015. So that's the story in a nutshell.
I want to take back real quick before we dive into what we want to talk to about the impact that joining like the Big I, the PIA, or an organization like that, had on you. It put you in front of Jason Cass at that time, who was talking about a lot of progressive things at 2011. And I just immediately thought of like Sean and I met at the Big I event, which is how this podcast started, which is how we grew the community we have, like all those things. Like I see sometimes in these online groups, like someone like, oh, what do they really offer? And like, just from personal experience, like it's been everything for me as far as like licensing, what not to know, when I was getting the Scratch agency started, I say it all the time. There's a lady, Christine Neat, who's head of membership of Big I New York, and Sean knows her well too. And I'm like,
yep.
If it wasn't for her, I don't know if I would have kept going with this thing about the licensing and all that. But they like, it's just, did you have a similar experience with those organizations? And I guess I'm just quickly taking a side road and talking to the people who may be Scratch that are thinking of that, and maybe they don't want that expense, or is it worth it to be a part of those different organizations?
I would say you can't afford not to participate in your local associations. So I balance the insurance side and the financial side. So my attention tends to get split. So when I decide to spend time in a particular association, like, I've got to see a pretty good justified return on my investment of my time. Yeah. So I try to find the places where I feel like I can get the biggest return. But your local association, man, I mean, they're number one, they're fighting for you in the industry. So there's an element of it. I know when you're scratch, like funds are hard, but you can still be involved. But man, they're fighting for you. They're protecting our income. So I think there's some obligation to be involved. But like you said, man, the relationships, you just never know who you're going to meet and where that relationship is going to go in the future. I literally have only gone to two conferences with my local associations in the past 14 years of being Scratch. And literally the relationships that I met at those two conferences have carried me to where I am today. And the relationships that I've made off of those relationships have carried me to where I am today. So like if you don't participate, man, you're missing out on meeting really cool people, especially these days, man. Like there's a lot of guys in our circle who are going to these local associations or state associations presenting that, man, they're adding a ton of value.
Yeah. Erik, can you talk to me? Something that caught my attention too is you mentioned hiring a mentor. And I believe you said the mentor is more geared towards the financial space. But was that a mentor where it was like a big investment and it stung a little to do? And did you see the ROI on that? And what was like kind of the biggest takeaway from that? I'm just curious your thoughts on that.
Yeah, it's a good question. Yeah, it stung. It was a $10,000 a year coach back in 2007. So if you apply some inflation to that,
Yeah.
it's a little bit more than that now.
Yeah.
It was, so I grew up in the insurance space, grew up as a captive, going to captive conferences, qualifying for the conferences, and everything you hear is like in this like beautiful little protected bubble, this protected space, right? How do you market, how to build a business? It's in this like curated space. And what this guy did was like, it was a different way of thinking. It was stuff that like, oh my God, no one's ever presented these ideas to me on how to market, these cool ideas on getting people's attention. Email marketing. I mean, this is a long time ago, right? 2007, Sean, you know how old I am. If Steven has arthritis, but it challenged the way an outside coach challenged the way I was thinking. So I worked with him for about a year and a half, and there's again things that I learned from him I'm still using today. My mind, the way I think, changed working with him, in that is carrying over through to today.
Yeah.
So yeah, man, I'm a huge, I mean, a lot of what we do on the financial planning side, when I work with a lot of agency owners, it's that kind of coaching mentorship. Is like, I've been there. I know what it is. We have to think differently about money. We have to think differently about the decisions that we're making, and having outside eyes that understand your industry are huge. So when I hired a coach who understood my industry, who are outside eyes, who could speak to me differently than someone like in this safe little bubble of the captive, that's probably one of the things that ultimately moved me to make the decision to go independent on the financial side, because I was starting to find myself in front of different types of clients that had different types of needs.
Yeah.
And the needs were bigger and more weighty.
Sure.
And
Yeah.
the captive just couldn't support that.
Yeah, I think it's an interesting conversation. We've talked about it on the last couple of episodes, I believe, is like the importance of investing in yourself and a mentor, right? But then it is kind of like a hard balance. It's like, as scratch agents, funds can be limited. And it's like, how much do you know? Like, long term, if you're hiring the right person, the ROI is going to be there. But it's understanding what that almost like right percentages to allocate towards it. So I'm just curious, in your position as a financial advisor, like, what do you think would be a good thought process to put around that? Or am I just thinking about it the wrong way completely?
No, I think you're thinking about it. I think you're thinking about it a good way. I would say this: I don't think you need to drop a lot of coin to hire a coach if you're struggling to make ends meet. I think that there's a lot of we're in a very giving industry.
Mm-hmm.
My guess would be, Sean or Steven, if a young agent called you and said, and I actually did this with another agency owner. if a young agent were to call you and say, hey, Sean, look, this is where I'm at in my business. I've listened to your podcast. I respect what you do. Are you willing to commit 3 months to me where we hop on a 30-minute call a week? I'm going to give you some very specific things that I want to do, and I would like your feedback, and I would like your outside accountability. Could you do that for me? Or maybe once every other week. You'd probably be like, yeah, I'd consider it. If you're committed, I'll consider it. So I'm not dropping any money. It's costing you a little bit of your time. But again, we're in a giving industry. I called an agent friend of mine that I had met through one of Cass's brain shares, and we'd become good friends. And I've got a pretty strong personality, and I know that. But his personality was stronger than mine. And I said, hey, dude, are you willing to commit to me for 3 months? There's some really specific objectives I want to complete. I want your input on it. And then I just need your fierce accountability to make sure I get it done. And don't take any of my BS. So I think there's ways around it, but I think it's that mentality of I've got to find someone. Number one, I think there's a humility in that, saying like I don't have all the answers and I need some exterior input.
Yeah.
In terms of spending money, I mean, in our space, there's some folks that are fairly affordable. We're talking a few $100 a month that you could have access to, and it might not be one-on-one all the time, but there's so many groups that you can join if you're looking for it, to get some ideas, to get some mentorship, to get questions answered without necessarily breaking the bank.
Yeah. No, I hear you. Yeah,
100%.
There's a ton of different options now. And I do think like, a part of the reason for that, I wanted to have that conversation is I do feel like when you get to the point where you can make the investment, there is something to making that $10,000 payment where it stings a little. So now you're going to be even more accountable to it. You know what I mean? Versus doing it for free.
100%, dude. When you have skin in the game.
Yeah, 100%. All right. Anyway, before I go too far down this work.
On that, here's a funny story. I had a client. This is probably like one of my longest standing clients. Like everything possibly you could do with a client, from insurance to investments to succession planning to I've sat through the sale of a business with them. Invest his assets, and we've done everything together. And he was a gym owner. Okay. And he's like, oh, I'll give you a free membership. So I had this free membership. You know how often I went? Mm-hmm. Never. So comes the next year. He's like, oh, dude, I'm just giving you free membership. And I finally said, dude, you have to charge me. If you don't charge me, I'll never go. And he's like, I can't charge you. So he didn't charge me. I quit the gym. I'm like, I'm never going. This is silly. So I ended my membership, and it would have been like $40 a month if I were to pay him. I quit and then joined a gym where I pay significantly more, and I was going 4 times a week. I'm like, I can't. I'm paying $180 a month for this gym. If I don't go, like I'm pissing money away. So when you have skin in the game, sometimes it makes a difference.
For sure.
Sean, one last thing. I promise this is it. Past the skin in the game, past the financial investment, put yourself out there, right? Be involved in the Facebook groups, be involved in the different community groups, the masterminds, whatever, and put yourself out there. Be vulnerable. Like Erik said, everybody is so happy to help and willing to help. Think of how many missed opportunities to connect with someone like Erik or to connect with someone like Sean are missed based on you just not saying, like Erik said, hey, can I have a few minutes of your time? I think that's so powerful because there's a laundry list of people that I've had a call with, whether it's 10 minutes or 2 hours, that I can attribute my early success of getting the agency started back to those conversations that all came from just putting myself out there. Sorry, Sean.
No.
On that note, man, so I coach my daughter's middle school basketball team, right? Mm-hmm. Like fourth graders to 7th graders. And I was telling some of the girls, like, y'all got to just like any opportunity you have at school, just get a basketball, go play. And one of the girls was like, well, I don't want to play during lunch because the boys make fun of me because I'm not very good. And like the only way you're going to get better is if you put yourself out there and practice. And I quoted I'll quote Taylor Swift. Players are going to play and haters are going to hate. That's what people say. But it's the same thing as you can't not put yourself out there because you're afraid that someone's going to think that you're not successful,
Mm-hmm.
or you feel like you're going to ask a dumb question. When you're starting from scratch, like you're so hyper focused, sometimes things that you think should be obvious, but you're so hyper focused on succeeding, you miss things.
Yeah.
So by having other people help see blind spots, it's super important. Once you have a little bit more success and you can back up and take a breath and see from a wider perspective. But man, early on, you can't be embarrassed to ask questions. You can't be embarrassed to ask for help.
No. I mean, last year I reached out to Billy Wagner, Louis Gazatua, Brett Young, and a couple other like just big agents out there. And I just straight up asked them, hey, if I'm trying to be the top insurance agent in my space, what would be the 5 daily activities you'd focus on? And I just gathered all the data from everybody. Nobody charged me anything, and I got some good information from it. Yeah. So don't be afraid to ask. That's for sure. Yeah. But Erik, let's go into the next thing. I'm going to skip over the other question I had for you, and I just want to get right into it. You had a conversation with Cass last year, and it was a really interesting conversation you guys had around the topic of what to pay yourself as the agency owner, right? Mm-hmm. And a lot of us that are scratch agents, maybe just starting out, it might be a kind of a hard thing to think about because you're just trying to get revenue in the door and survive. But let's say you've survived, you made it a year or two. Where should we start as far as what we think is a reasonable pay for ourselves or our partners?
Yeah. I would say even if you're like, this is day one and you don't even have the revenue to pay yourself or to pay anyone really. I still think it's a valuable exercise. Is you should pay yourself as an owner 2 ways. Well, first of all, as owners, we make money 2 ways. One is by working, like most people do, right? We exchange our talents, our skills, our knowledge, and we get paid for it. And the other way is through distributions, through profit. We generate a profit. Okay. I think it's really important that you as an agency owner understand those 2 roles. They're 2 very distinct roles. Most of the money that I draw from my agency today is as an owner, not as a worker. Now I do some work for the agency, and the way I set my salary is what would I have to pay somebody to do what I did for the agency. So I think you as a worker, if you're selling, if you're managing, if you're in operations, pay yourself what you would pay someone else to do that job. If it's $30,000, pay yourself $30,000. If it's $150,000, pay yourself $150,000. Okay?
What happens if it's an old family member that shows up at the office twice a week and doesn't do much?
I'm gonna tell you, those are challenging situations. Let's go there. Let's go there. My first business partner was my brother. My brother in the early days, and he'll tell you he just wasn't a great salesperson, right? And he was supposed to be selling, and he ended up going back to engineering because it just wasn't working out in insurance. It was like, dude, I can't continue to pay you the salary we're paying if you're not driving revenue. Luckily, I was the majority owner, so I had a little bit of weight behind what I could do. But I think you need to be able to. I mean, that's the problem with some family businesses is people get lazy and they get used to just drawing a nice fat salary. And this is even a problem for those of you who are thinking about selling. Like if you're first generation and you're going to sell to the second generation. I had this conversation with Kerry Wallace on one of our podcasts. Is the first generation oftentimes limits the second generation in these sales because they want like this perpetual payout for the rest of their life. And what they do is they rob the second generation of revenue to be able to grow the agency because I got this giant, perpetual salary or payout that I need to give to my dad or my uncle or whoever because they didn't plan for their retirement properly. They didn't plan their exit properly. But that's a tough situation. And those are conversations that might take a while, but and there's not a solution to everything. But I think agency owners, that's where the conversation should start is what would I pay someone to do this job? Pay yourself that. Now, I mean, there's some nuances in that, right, that we can get around from a financial planning standpoint. But like, I would start with, what would I have to pay someone off the street to do this job? Pay yourself that. As an owner, if you're running a 25% or 30% profit, and you have $1 million of revenue, and you pay yourself, $60,000 to manage, because you're not selling, you're not really involved. You come to the office twice a week, right? So like, I can't pay myself $300,000 if I'm coming twice a week. I need to pay someone to do the job that I'm not doing. So I draw 60,000. I run a 30% profit. I have $1 million of revenue. I get to draw 300,000 in profit in distribution.
Yeah. I could see how it could get a little confusing if like you're an owner that kind of does, I don't want to say does everything, but you sell, you manage the team. You're almost like an operations manager, but also a commission salesperson, So I guess it's finding that right balance of how to do it.
Yeah, look, and early on, like when you're driving, like you get to your first 100,000 of revenue, your first 200,000 of revenue, you're doing everything, right? You're renewing, you're selling, you're
answering all the phones.
You're doing everything, man. But as you start hitting these different marks, you're able to have people do, okay, you are my personal line salesperson. Like I just hired for the first time. I just hired successfully for the first time a commercial producer. That's all he does. Commercial, big commercial. That's what he's prospecting, big commercial. We're at that point, we have the revenue to do that. We have an entire department that does personal lines renewals, and we have one person who we're trying to designate just personal lines production. So when you're big enough, you have enough revenue, you can start to have people who stay in one lane.
Yes.
And it becomes a little bit easier to figure out how to pay them.
Yeah.
But I'm going to tell you, man, like when you start looking at the best practices, I push back hard against some of these best practices because I don't know what I'm comparing against. I'm on the coast. It's really hard to renew business down here. It's expensive for me to do business down here because literally every renewal it's a soft lead. It's a warm lead that we have to remarket. Man, that takes up a ton of resources. So when I start comparing my cost of staff, or the number we love to talk about is the revenue per employee number, I'm low compared to what best practices say. And I look at that, I'm like, oh my God, I'm not successful in it as an agency owner. But we're still running a 20 to 25% profit. So you got to be careful what you're comparing to. But early on, like, everyone's a little bit different in how they operate. But start with pay yourself what you would pay someone to do the job, and then go from there. That's the starting point. I'm not saying that's where you end, but that's the starting point.
Yeah, that makes sense.
I want to dive into the beginning days of the Scratch Agency, and there are a lot of moving parts there when you early had the business with your dad, and then did the financial service business, and then you kind of now are doing both of them. Talk to us of what's worked well of really building the team so that you're not really working in the business versus working on it. I mean, you said that you're not really in the day to day. And I think that's what everybody that's listening to this in our positions of, like Sean said, answering all the phones, doing all the changes, all that, you all look at that like, man, at one point someone else is going to be doing this and someone else is going to be doing this. But like, what has worked well to get you there?
In preparation, I didn't do much preparation, but the one thing I did in preparation for this was, let me go back to some like the early notes that I had from when we were a Scratch Agency, some of like my early planning documents. And I have this document from 2011 that I pulled out, and I created it after I went and heard Tony Hsieh. He was the CEO of Zappos. If you're familiar with Zappos, where you buy shoes and stuff, he's recently passed away, or not more, a few years ago passed away, but like, Zappos was known for having this unbelievable culture. And he wrote a book called Delivering Happiness. If you've never read it, it's a really good read about establishing a solid culture. And I created this questionnaire of kind of thought-provoking questions to ask my staff to, like, what is our culture? Oftentimes culture is top down. And it doesn't always. I mean, you've been to companies where they say we're honesty, trust, loyalty, and you're like, man, they're full of crap. That's not their culture. That's just some phrases that they pulled. So I asked these really cool questions of our staff, and I had them kind of answer these thoughtful, feeling type questions, like what do clients say after an interaction with you? What do they say about? How would they talk about that interaction with a friend and those types of things, and really pull these really cool culture value words from it. And we developed our core values based off of what we were already doing. Everyone has culture or core values. It's just whether you're intentional or not. So I kind of figured out what we were currently doing well. And I'm like, these are really cool core values. This is a really cool culture. And early in the agency, I wasn't very involved, and our culture became very inconsistent with what our core values were. And it was very obvious. And to me, it's like, we have to fix this, because this is not a fun place to be. This is a hard enough industry, and we have like these stupid fights with staff. Like, come on, guys, like, we're on the same team here. Like, you don't have to protect this or protect that, or like, why are we fighting? It was infighting. So we started managing based off of our core values, started hiring based off of our core values, firing off our core values. And we don't do a lot of hiring and firing. But what's happened over the years is we've ended up with some really good people that embody our core values. Stuff like consider others more important than yourself. So as a team, if Tammy's working with me, she has to elevate me. And if she thinks highly of herself, she has to elevate me even that much higher. So it creates this really interesting dynamic with the team members. Create a team environment, right? Pursue growth and learning. Embrace change. Let fun happen. We like to laugh. We like to joke. So we make sure that we are having fun in what we're doing. So we have team members that over the years have embodied these values. So they have ownership of what we're doing. And when you have people who have ownership of what's going on in the agency, as an owner, you can step back and just create the environment for them to be successful. And I think, Sean, you might have talked about, you're selling, you're operating. I think as agency owners, we have the privilege of pursuing what we enjoy most in the business, and then build a business around that.
Yeah.
And the most successful agency owners do that. And quite frankly, you start to create a more saleable business when you do that. When you're less involved in the day-to-day, the operations, if you're just out selling big accounts because that's what you want to do, and then you have other people running everything else, or you're just out networking, shaking hands, the business becomes more saleable because you're less integral. I could go away for a year and the business would probably continue to grow at a 15 to 25% clip.
Yeah.
Right.
Yeah. I mean, I think it all comes down to, and Stephen and I talk about it all the time, it's like figuring out what those low dollar tasks are, or tasks that you said that don't light you up, Erik, that you can give to somebody else who's going to do it way better than you can do it, and doing that incrementally over time to weed yourself out of those energy sucking tasks. You know what I mean?
Somebody once told me, I don't know who it was, but they said, hire someone to do all those things you hate to do. Go get, and I'm like, I don't have any money.
Yeah.
Like, go to your local bank, get a line of credit. I don't want to borrow money. Just do it. You probably won't even touch your line of credit. So like, if you're like, I can't afford someone, I would say, man, in this business, you can't afford not to have someone. Go get a line of credit in case you need it. And the chances are you won't even touch it because you're so unaware of the cost it is to you to not have someone.
Yeah.
It's costing you more not to have someone than it is to have someone.
Oh my God. Yeah. Yeah. That's, I can't think of a truer statement than that, because when you start writing out and looking at like, Michael Cruz told me about the software. So I went through this whole thing of like time and energy audit. We've talked about it a bunch of times. And Cruz told me, like, I was writing down every 15 minutes kind of what I was doing to audit my time. And Michael Cruz told me, like, oh, you should look into this software because it kind of like tracks your computer and it tells you which pieces of software you're spending the most time on. And when I looked at it and I saw email number one, and it was like it was like hours a day. And I was just like, oh my God, that was like the biggest eye opener, and then figuring out how to delegate that or pass it to someone else who can help assist that, which will make the customer process much better. It'll make everything more efficient. So I couldn't agree with you more on that.
Yeah. And I mean, as a scratch agent, you decide, like, there's those agency owners that are entrepreneurs that are in the insurance space. And they're agency owners who are just really good insurance people who are not really entrepreneurial. They're not business owners by nature.
Yeah.
And I
They're
don't think
employees of their own company.
yeah, they're employees of their own company. I've talked to some agency owners that often think like, dude, you would make far more money if you just went and sold for another agency, because that's what you do. Because you're a terrible business owner, but you're a great salesperson, and you're spending so much of your time trying to manage people, and you're terrible at it. And I think you get to decide. Are you a business owner? Are you an entrepreneur, business owner who's in the insurance space? Or are you just a good insurance person? And I think good insurance people can run businesses. I don't think you have to be, super entrepreneurial to operate a small lifestyle shop. But I think that's something really important to understand. What are you trying to build towards? If you don't know what you're building towards, you're going to wake up 5, 10, 15 years from now regretting where you are or lamenting where you're not.
Yeah, that's so good. Eric, as we look to wrap this up, we haven't asked this question in a while. We used to be consistent with this, Sean, but if you were to wake up tomorrow morning, start over from day one with a scratch insurance agency, what do you think you would do differently, or is something that you would focus on right away that you've learned over the journey of owning an agency?
All right, so I know everything I know now. Do I have the money I have now or no?
You have the money that you had when you started your scratch agency. You have the knowledge.
Man,
you can have whatever money you want. I don't care where you get it from.
Line of credit.
I mean, I'd have to really give. I don't want to like give a cop out answer. I don't know what I would. I don't know what I would do differently. I don't know if I would do much differently. I probably would. I probably would have better systems and processes in place day one. That's exactly what I would do. I would have better systems and processes in place, because when those renewals hit, you got to think, at the time, premiums are $2,000-$3,000 already, and our biggest carrier took a 30 to 40% rate increase.
Right.
And we didn't even call all our clients. We were just we can't even get to it. Right. So we lost a lot of business just by natural attrition, because they just went out elsewhere. But if I had better systems and processes in place, we would have gotten bigger. We would probably be where we are today in 2015.
I like that.
Big deal.
Man, this was a great conversation. We had a lot of great topics and dove deep into them. Eric, thank you for taking the time to join us.
Yeah,
for somebody who wants to pick your brain, what's a good place to get in touch with you, follow your journey? If they want to reach out on something you said, what's a good place to do that?
You can go to plan-wisely.com. Plan-wisely.com, and there's a schedule link. I mean, it's out there to the public. I say that now. One day I'm going to have to take it down from the public, but right now, while it lasts.
Get it while it's there, ladies and gentlemen. That's right.
Yeah, and people can email me, Erik, E-R-I-K, at plan-wisely.com. I'm pretty accessible, pretty easy to find.
Awesome. Great. Well, thank you again for joining us, everybody. That's another episode of the Scratch Agency Podcast. Thanks for joining us. Do us a favor, like the show, share the show, and subscribe. Additionally, make sure to check out our Telegram. Go to scratchagencypodcast.com. Hit join the community. We've got about 56 people, I think, in there now, all scratch agency owners. Great conversations, people that are starting last month to people who are 22 years into it. It's a great place to be, free community to join. Make sure to jump in there. Most importantly, remember to dig down deep, believe in yourself, and own your own future. We'll see you next week. Take care.